Let's break down the latest earnings from 4 companies making headlines: Nio, Dollar General, Abivax, and Credo Technology. We'll see how each one performed, what Trump's tariffs might mean for them, and whether they look like a buy, hold, or sell. First, quick disclaimer, this isn't investment advice. Always do your own research before buying or selling any stock. Nio, financial performance. Nio pulled in $1.66 billion in revenue, up 21.5% year-over-year, but still fell slightly short of estimates. Earnings per share came in at negative 45 cents, a deeper loss than expected. Definitely a red flag. On the bright side, gross margin improved to 7.6%, which is a step forward, but let's be real, they're still deep in the red. And tariffs? That's a looming threat. Since Nio relies heavily on exports and global sourcing, any new US or EU import duties could hit their margins hard. In response, they've kicked off cost-cutting initiatives and launched revamped models to stay competitive. As for the outlook, they're guiding for 72,000 to 75,000 deliveries in Q2. Not bad, but far from game-changing. Bottom line, with rising risks and ongoing losses, the stock feels too shaky to bet on right now. For now, it's a hold. Now Dollar General, that's a different story. They crushed expectations with $10.44 billion in revenue, a solid 5.3% jump and well above forecasts. EPS landed at $1.78, way ahead of the expected $1.47. Margins came in strong at 31%, and they generated $847 million in free cash flow. Even better, they raised guidance, now expecting up to 2.5% same-store sales growth this year. Tariff risks? Practically none. Their supply chain is mostly domestic, so they're well insulated. Looking ahead, the company's positioning couldn't be better. With inflation hitting consumers, value-driven retail is exactly where you want to be. Verdict: defensive, cash-strong, and steady. Dollar General is a buy. Abivax, on the other hand, is still very much in development mode. Everything revolves around obefazimod. Revenue was just 1 million euros, typical for a pre-commercial biotech. EPS dropped to negative 0.83 euros, and cash reserves shrank to 103.6 million euros, giving them runway only through Q4 2025. To make matters worse, shareholder equity flipped negative this quarter. Not a great sign. Tariffs don't directly hit them, but macro headwinds and tight funding windows put real pressure on their future. They're trying to preserve cash by slashing non-essential spending, but time is not on their side. And when it comes to what's next, everything hinges on the Phase 3 trial results, induction data in late 2025, maintenance data by mid-2026. Until then, it's all speculation. The verdict? High risk, high reward, but for now, this one looks like a sell. Finally, Credo. And this one, pure momentum. Revenue soared to $170 million, up an eye-popping 180% year-over-year. EPS came in at 20 cents GAAP and 35 cents non-GAAP, beating expectations on both counts. Margins? A very impressive 67.2% gross. That's elite territory. They didn't offer forward guidance, but with $431 million in cash, they're in a strong position. Tariffs may affect certain components sourced from Asia, but nothing was flagged in the report. Their eyes are set on growing demand for high-speed, low-power connectivity, and they're well-positioned to ride that wave. Going forward, even with some elevated operating expenses, they're profitable, liquid, and growing fast. Verdict? With fundamentals this strong, Credo looks like a buy. In conclusion, Credo is firing on all cylinders, profitable, growing, and well-funded. Dollar General remains a solid defensive play with strong cash flow and rising guidance. Nio is improving, but the risks are still hard to ignore. And Abivax? High potential, but burning cash fast. It's a tough bet right now. In short, 2 buys, 1 hold, and 1 sell. Whether you're playing it safe or betting on biotech moonshots, just make sure you're making decisions based on facts, not hype. And as always, this isn't financial advice. Do your own research, stay sharp, and I'll see you in the next one.